Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Ryan McCormack, Factor and Core Equity Strategist at Invesco, to discuss weekly performance in the Nasdaq-100 and concentration attribution in the index. Ryan, it's great to see you as always. Welcome back to Trade Talks. It's been a busy week. We had 5 out of the 7 7 names report last week. What were some of the trends that you've noticed week over week?
Yeah, a lot to digest over the last week, but ultimately a positive week for stocks with QQQM and QQQ both being up 1.29% and 1.28%. That underperformed the S&P 500 index up 1.41%, but outperformed the S&P 500 value index, which was up 0.52%. And to your point, we saw a slew of heavyweight earnings reports and pretty decent economic data. But I think if you look at today, we're kind of bucking the trend with stocks down for most of the morning, although Nasdaq 100 turned positive just a few minutes ago. You have investors digesting comments from the Fed officials after their meeting last week that they need greater confidence that inflation is nearing the long-term target of 2% before they really start discussing cutting rates. And then you get today's ISM services report that showed really strong expansion in the services sector, but also prices paid climbing to the highest level that we've seen since February 2023. And on a month-over-month basis, the largest increase in over 11 years. So I think you're starting to see a little bit of trepidation about whether or not the Fed is going to embark on this rate cutting cycle and when that may occur. According to the Fed funds futures today, the chances for a March rate cut moved down to 16%. And that's down from last week on Monday, where the chances for a March cut were at 44%. So, as always, this has been a very Fed-driven market over at least the past couple of years, and I think looking at the price action from today is no different.
And Brian, let's take a look at concentration attribution here for a moment. You're taking a look at the top 3 and the top bottom in terms of these really big names that can impact the index. What can you discern from here?
Yeah, so I think it was slight underperformance, but just in looking at the attribution from kind of the top 3 and the bottom 3, you can really see that the power that some of these large overweight holdings can have on a weekly performance, and then of course on a long-term performance basis. So the top 3 contributors to relative performance against SPY or the S&P 500 proxy were Meta, Amazon, and Nvidia. And I think, of course, let's look back at this past week. We have Amazon and Meta both reporting earnings. We saw Amazon up nearly 8% in the session after. They beat expectations on both revenue and EPS and showed some pretty favorable guidance for the current quarter, with expectations for sales and income that were higher than estimates. AWS saw a slight acceleration in revenue, but still kind of raised questions about how long AWS can sort of hold its dominance in the cloud space. And then you have Meta. Meta was up over 20% in the session after it reported earnings, beating estimates on both revenue and sales. And the company saw favorable usage on apps, especially around kind of the short form videos that have been a bit of a question. The company also announced its first dividend and authorized a $50 billion share repurchase program. So that's the good. You can kind of see how much that good news filters through the ETF, filters through to the ETF with that strong performance. On the other side, you see the bottom 3 contributors, Apple, PDD Holdings, and Qualcomm. And you see Apple reporting earnings, and despite an EPS beat and a slight revenue beat, forecast for sales was not that rosy. There are still lingering questions around a China slowdown. And you can see it really did weigh on performance for the week. So, within QQQM, the Nasdaq 100, given that it's only 100 holdings, chances are that things are going to be overweight to the S&P 500. And depending on whether it's good news or bad news, it can have kind of a magnified contribution when it comes to relative performance against the S&P.
All right. And finally, your last chart here, we could take a look at year-over-year earnings growth. I mean, there were a couple names here that really stand out.
Yeah, for sure. And, I think this is just to kind of illustrate the trend that we've been seeing, right? We get super focused on one Fed meeting or one inflation print or even one earnings release. But, I think it's important to maybe take a little bit of a step back and take a look at where the trend is going. So this is showing the 5 companies or the 5 heavyweights that reported last week. Alphabet and Microsoft reported on Tuesday, the 30th. Apple, Amazon, and Meta all reported on Thursday, February 1st. So when you look at the revenue figures of all of these companies, Microsoft had its 5th consecutive quarter with record revenue. Apple was their second best revenue quarter, only behind Q4 2021, calendar Q4. Amazon, record revenue quarter. Meta, second straight record revenue quarter. Alphabet, second straight record comparable revenue quarter. And then on the EPS side, right, you're seeing, you know, something that is not an all-time record in terms of earnings growth, but you can see the trend pretty consistently. And this is over the past 3 year, 1 year, over the past 3 years, looking at 1 year EPS growth. And calendar Q4 of 2023 was the most recently reported earnings. You can see from peak earnings growth in Q1 or Q2 of 2021, all of these companies saw a pretty significant downtrend in EPS growth for the back half of 2021 and throughout 2022, with all experiencing at least 1 quarter of EPS declines, or in most cases, multiple quarters back to back. That earnings growth decline seemed to bottom in Q4, calendar Q4 2022. And throughout last year, you and I spoke, we started to see this improvement in earnings declines and eventually acceleration in EPS growth. And it was unsurprisingly kind of commensurate with an improvement that we saw in the revenue figures. So, you know, with this trend certainly continuing in Q4 of the most recently reported earnings, you can kind of see this really healthy EPS growth, which is pretty shocking for companies of this size, right? I mean, reporting income figures at this level, or even revenue figures at this level, the fact that some of these EPS numbers from a growth perspective are this high, I think is shocking, and certainly talks to the success that these companies have had over the past number of quarters.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.